home equity loans and home equity lines of credit. What's the difference between the two, and how can you utilize them both to get ahead in your financial journey? Hey, what's going on, guys? Welcome to NYM, a channel dedicated to financial literacy and wealth building amongst the younger generation. My name is Christopher Bell, and if you've purchased a home in the past 2 or 3 years in the United States, chances are you're seeing a substantial amount of equity in your property, right? And because of that, you have opportunities available to you that you could utilize to really grow your financial portfolio, okay? So I'm going to tap into a couple of things. I'm going to tap into equity. Number one, if you're truly a beginner and you're not sure what equity is, I'm going to define it. Matter of fact, let me go ahead and do that now. So equity is basically the amount that you would get if you were to sell your home today minus how much you owe the bank or whatever lender you use to finance your home. Okay, so how much your house is worth minus how much you still owe on it. That is your equity position. So for an example, if you have a house that's worth $150,000 and you still owe $100,000 on that home, well, you have an equity position of about $50,000. Okay, I say about because when you sell a home, there's a lot more that goes into it as far as closing costs, realtor fees, but just keeping it simple for the purposes of this video, okay? So that's what equity is, all right? And I'll say it one more time, the third time. It's the amount that you have in your property, how much your property is worth, minus how much you owe to the bank or lender. So interest rates will typically be lower on a home equity loan or a home equity line of credit because it is secured by your home. So in the event that you don't pay that loan or that line of credit, they're going to foreclose on your home in order to recoup the funds back that you did not pay, right? So because it is a secure line of credit, they view it as a lot less risky of an investment on their part. Them lending you the money is a lot less risky, so they will typically give you a lower interest rate. Not all the time. I've seen some home equity lines of credit be up there, like way up there as far as the percentage that they're giving you as far as the interest rate, but then I've seen them extremely low too. So just make sure you shop around for the best product when you're looking for one of these, okay? So to tap into the differences of a home equity line of credit and a home equity loan, what is the difference? The difference is basically with a home equity loan, all right, they're going to give you the money and you're gonna start paying interest as soon as they give you that check. All right, as soon as they make that deposit into your account or they give you that check, that's when your interest starts accumulating, right? Now, when you spend that money, and let's say you pay it back, or when you pay it back, you don't have access to that money because it is not a revolving account, all right? Revolving account meaning that you can pay it off and then take it back out. Pay it off, take it back out. You don't have that option with the home equity loan. It's basically a one-time check to you to handle any type of immediate expense that you have. Now, the cool part about a home equity line of credit is that it actually is a revolving line, okay? So you can take that money out and you can put it back, take it out, put it back, so on and so forth. Now, you're only going to use, or let me rephrase that, you're only going to pay interest on the money that you use. So for instance, if you have a line that's worth, $100,000, that $100,000 can sit in the bank and you will not pay a single dime of interest unless you start utilizing it, okay? And when you utilize it, unlike a home equity loan, you don't have to take out the full amount. You can take out, let's say if you have a $100,000 line, you can take out $10,000 and you'll only pay interest on that $10,000 until you pay it back. So to recap, the two, the home equity line of credit and the home equity loan, the home equity loan is basically a one-time payment to you that you're going to pay interest on, effective immediately, and once you pay that money back, you no longer have access to it. The home equity line of credit is a line that you have available, usually for about a 10-year period. Most places around here in North Carolina do a 10-year period, and then they'll reassess your equity position and so on and so forth, and they'll reevaluate loan terms and all that stuff, but it's usually about 10 years. But with the home equity line of credit, it is a line of credit that you only pay interest on when you utilize it, and it's revolving. So you can use it, put it back, use it, put it back. All right, and it's open until you close it, or like I said in North Carolina, that 10-year period is over. Now, why would you use either one of these, right? Well, if you've watched my other videos, you've heard me say a couple of times, it's not about how much money you have, but it's about how much money you have access to. Using a HELOC is one of the ways that I actually was able to become a millionaire by age 31, okay? The way that I did it is I had so much equity on my primary home that I took out a home equity line of credit, okay? Remember, the line of credit, so I have access to this money whenever. And then on one of my first investment properties, I was able to get a home equity line of credit on that property as well. So now my purchasing power is just up astronomically, right? So I ended up going and buying houses in cash using the home equity line of credit. And then this is basically diving into the BRRRR method, which I'm not going to get into in this video. I'm gonna do a completely separate video for the BRRRR method. But basically my process is I buy homes in cash, then I renovate them and I refinance them for the after repair value, which is greater, way greater than the amount of cash that I had to spend to purchase the property and fix it up, okay? So I get all my money back on the refinance, and then I pay that back to the home equity line of credit. And I use the same money over and over and over again. All right, so that is one of the ways that a home equity line of credit can benefit you greatly, especially if you're a real estate investor. All right, now as far as a home equity loan is concerned, a lot of the people that I've talked to that have used a home equity loan, they basically use it for debt consolidation. So let's say you have a bunch of credit cards that have high interest rates. Debt consolidation can easily be achieved through a home equity loan. And again, because it's backed by your home, it's gonna have a much lower interest rate. So if you have a lot of high interest debt, a home equity loan would be a great product to use to consolidate some of that debt, okay? Or if you just have projects that you want to do around the house, let's say for instance, you want to get a new patio built out back and you don't have, $15,000, $20,000 right up front to be able to, fund that purchase, you can take out a home equity loan and just pay it back over X amount of time, and there you go. All right, so those are just a couple of ways that you can utilize a home equity line of credit and a home equity loan. Reach out to your banks, reach out to your lenders, and make sure you shop them around, okay? Like I said earlier, they're not all created equally. You're gonna have some people that are gonna hit you with a higher interest rate, some lower. It just depends on that institution, okay? But I hope this video helped. As always, leave me a comment down below. Let me know if you've used a home equity line of credit, if you've used a home equity loan, and any other questions you might have. Also, do not forget to like this video and subscribe to the channel. I think we're right at 125 subscribers now. It's not bad for 2.5 weeks, man. I'm extremely, extremely happy with our progress so far, and we have much, much further to go. As always, thank you guys, and I will see you in the next video.